Welcome to Talk Tickers. We're diving straight into NRG Energy's latest earnings call today, really getting into the details for you.
Yeah, lots to unpack.
We'll cover their first quarter performance and a really game-changing strategic move they've just announced.
Absolutely. And the headline from Q1, well, it's a record-breaking adjusted EBITDA for NRG. Saw a 30% jump compared to last year.
30%. Wow, that signals some serious operational strength.
Definitely.
And it wasn't just EBITDA, right? Their adjusted EPS, that's earnings per share, a key profitability metric, it shot up by a hefty 84%.
Yeah, 84%, up to $2.68.
Huge jump. What was behind that?
Well, a few things feeding into it. Strong performance from their power generation assets, better profit margins with their consumer base.
Okay.
Favorable weather helped too, and they mentioned some smart moves, sort of optimizing natural gas up in the Northeast.
Right. Makes sense.
What's interesting, though, is even with the strong start, NRG is sticking with their financial forecast for the full year 2025.
Really? Not raising guidance?
Not officially raising, but they did indicate they're tracking towards the upper end of those existing ranges. So still a pretty confident outlook,
Oh, okay, that makes sense. Confidence, but maybe some conservatism too. And they're returning cash to shareholders.
Oh, yeah, actively. They repurchased $445 million worth of their own shares through April.
Okay.
And there's still another, $855 million earmarked for buybacks for the rest of the year?
So financially, a really solid quarter, setting the stage.
Absolutely. Which I think brings us neatly to the really big news from the call.
The acquisition.
Exactly. NRG is buying a pretty substantial portfolio of assets from LS Power. It's a deal valued around $12 billion.
$12 billion. That's a major move. Reshapes the company, you said.
Oh, significantly, yeah.
Okay, so break it down. What exactly does NRG get for that kind of investment?
All right, so the core of it is 13 gigawatts of natural gas-fired power generation capacity. That's mainly in the Northeast and Texas.
13 gigawatts. Okay, big
Okay.
chunk of generation.
Huge. And on top of that, they're also getting a 6-gigawatt commercial and industrial virtual power plant platform.
A VPP, right. Explain that quickly.
Yeah, think of a virtual power plant, or VPP, as like a network of smaller energy resources. Could be batteries, could be flexible demand from businesses, all bundled together and managed by software to act like a single power plant for the grid.
Got it. So flexibility and traditional power.
Exactly. And this platform also operates across those same key regions, the Northeast and Texas.
So this isn't just tinkering around the edges. This is a massive increase in their ability to both generate and manage power, it sounds like.
It really is. I
Yeah.
mean, how does this change their overall size?
Well, it more than doubles their owned power generation capacity.
Doubles, wow.
Yeah. Creates a combined or, pro forma portfolio of 25 gigawatts. It's a huge leap in scale and, frankly, their influence in the power market.
It definitely sounds like they're positioning themselves to maybe capitalize on shifts in the energy market. What's the strategic thinking here?
Well, management really emphasized that it strengthens their ability to serve customers.
Yeah.
By boosting both the traditional generation side and these VPP operations.
Right.
Exactly. And they believe this lets them capture significant upside, especially if power markets tighten up, which, many expect with growing demand.
That's a key point. And what's also quite telling, I think, is that LS Power isn't just cashing out. They're becoming a major shareholder in NRG.
Yeah, I saw that. How much?
They're getting about $2.8 billion in NRG shares as part of the deal. That makes them roughly an 11% owner once everything closes.
Okay, 11%. That's not insignificant. Suggests they believe in the upside of the combined company, too.
It certainly suggests strong conviction, yeah.
Yeah.
You don't usually take that much stock unless you see a good future ahead.
And from NRG's side, are they talking about immediate financial benefits? Because $12 billion needs to pay off.
Oh, definitely. They were very clear. They expect this acquisition to be immediately and substantially accretive to earnings per share.
Accretive meaning it boosts earnings right away.
Right. That's a key word investors always look for. Immediate positive impact on the bottom line.
Okay, let's dig a bit deeper into the strategy side. How does this fit into NRG's bigger picture, their long-term vision?
Well, it dramatically increases their footprint in key competitive regions, especially the Northeast, where, frankly, their generation presence was smaller before.
Right. They were more Texas-focused historically, weren't they?
Heavily Texas-focused on the generation side, yeah. This really balances things out. And it also strongly supports their strategy for serving large energy users.
Like data centers. Everyone's talking about data centers.
Exactly like data centers. They specifically mentioned those opportunities. And interestingly, the financial forecasts they presented for this deal, they don't even include any potential upside from landing big data center contracts.
Huh. So that's all potential gravy on top.
Potentially, yeah. It suggests there could be even more upside than they're currently forecasting if they execute well on that large load strategy.
That's definitely something to watch. Did they mention anything about upgrading the plants they're buying?
They did. They've identified potential to add about another gigawatt of capacity.
Oh.
By upgrading some of the acquired plants in the east. Specifically, converting some simpler peaker plants, the ones that just run during high demand, into more efficient combined cycle plants.
Okay, so more power and better efficiency from the assets they're buying.
That's the idea. More operational flexibility, too.
And what about Texas? They're already big there. How does this change things?
It shores up their fleet, especially around Houston, and it also shifts their position in the residential market there to what they called naturally long.
Naturally long, meaning they expect to generate enough power in Texas to cover their own residential customers there.
Basically, yeah. Less reliance on buying power from the wholesale market for their Texas retail business.
Got it. And that VPP platform they're getting, SE Power, sounds important.
Very much so.
Yeah.
NRG described SE Power as a, quote, national leader in that commercial and industrial VPP space. They highlighted its proprietary software, which is key in that business, and a really impressive customer retention rate, like 95%.
Wow, sticky customers.
Yeah, serving businesses, institutions, that kind of thing. And as the grid keeps changing, needing more flexibility, this VPP capability becomes super valuable.
Makes sense. Okay, let's switch gears a bit to the financials of this $12 billion deal. What metrics are they using to justify the price tag?
So they pointed out the $12 billion enterprise value works out to about 7.5 times the projected 2026 EV to EBITDA.
Okay, 7.5 times. How does that compare? Is that good?
They presented it as an attractive multiple. The argument is they're buying this established capacity at a good price compared to the cost and time it would take to build totally new power plants today.
Right. Building new stuff is expensive and takes forever.
Exactly. Permitting, construction, all of that. So buying existing assets can look pretty good.
And what about the impact on earnings and cash flow specifically? What are the numbers?
They're projecting an 18% increase in adjusted EPS in the first year alone.
18%. That's substantial, like they said.
Yeah. And on a run rate basis, like looking forward, they expected to add about $1.85 per share. And for free cash flow, before growth investments per share, another key metric, they see that jumping over 20% in year one.
Okay.
Adding about $3.25 per share on a run rate basis. So big numbers they're putting out there.
Seems like it. And because of this deal, they're actually changing their long-term growth outlook.
That's right. They're bumping up their long-term target for adjusted EPS growth, the compound annual growth rate, or CAGR.
To what?
To greater than 14% annually. That's a 40% increase from their previous outlook.
40% increase in their long-term growth target? That's a big statement of confidence.
It is. And again, they stress this excludes any potential extra boost from, say, power prices going higher than expected or landing those big data center deals we talked about.
Right, the potential gravy. When do they actually expect this whole deal to close? It's not done yet, right?
No, not yet. They're targeting the first quarter of 2026 for closing. Still needs regulatory approvals and all the usual hurdles for a deal this size.
Okay, Q1 2026, so still ways off. Now, financing, how are they paying for this $12 billion elephant?
It's a mix, like I mentioned. Part of it is the NRG stock going to LS Power, about $2.8 billion worth.
Which is roughly 23% of the total deal value, right?
Yeah, around that. Then there's new debt, both secured and unsecured debt that NRG will issue.
Okay, taking on more debt.
Yes. And they're also assuming some of the existing debt that was already tied to the LS Power assets.
Got it. So with that new debt coming on, what are their plans for, paying it down, deleveraging?
That's a major focus.
Yeah.
They've committed to reducing debt by $3.7 billion within 24 to 36 months after the deal closes.
2 to 3 years post-closing, that's a clear target.
Very clear. They want to show they're serious about maintaining a strong balance sheet.
But even while they're paying down debt, are they pausing shareholder returns? Dividends? Buybacks?
Nope. They were quite explicit about that. They plan to continue returning at least $1 billion a year to shareholders through buybacks.
Okay.
And maintain their target of 7 to 9% annual growth in the dividend per share, even during that deleveraging period.
So trying to do both, pay down debt and keep returning cash, that's ambitious.
It is. It relies on the cash flow generation being as strong as they project.
And what about long term? Once the debt's down, what's the plan for capital allocation?
Once they hit their debt targets, they expect to go back to their standard framework. 80% of capital goes to shareholder returns, 20% gets reinvested for growth.
Okay, back to the 80-20 split. And the assets themselves, the ones they're buying, are expected to throw off a lot of cash.
Yeah, they project these assets will add about $1 billion in annual free cash flow on a run rate basis.
$1 billion a year. That's the fuel for the debt paydown and the shareholder returns, presumably?
That's absolutely the engine for it, yeah.
Yeah.
Provides a lot of financial flexibility if those projections hold.
And finally, on the financial side, what about their credit rating? Taking on debt can sometimes worry the rating agencies.
Right, but NRG actually anticipates this deal will strengthen their credit profile over the long term.
Strengthen? How?
By improving the scale and diversity of their cash flows, they argue it supports a long-term target for net debt to adjusted EBITDA of less than 3 times. And they expect all 3 big rating agencies to reaffirm their current ratings.
Okay, so they think the agencies will be okay with the plan.
That's the message they conveyed, yes. Confidence in maintaining their credit standing.
One last little thing from the call, they gave an update on their home VPP efforts. Residential demand response.
Yeah, a quick but interesting update. They're seeing really strong traction there. Better than expected.
How so?
They now expect to exit this year with 150 megawatts of capacity in that home program. That's way higher than they thought previously.
150 megawatts from homes. That's starting to get meaningful.
It is. And they also mentioned customers are signing up for additional services, things that generate recurring revenue, which points to a potentially good profit margin outlook for that residential VPPP segment.
Interesting. Okay, so pulling it all together. From an investor's point of view, what are the really key takeaways here?
Well, first, obviously, this acquisition is a massive strategic shift. It really ramps up their generation presence, especially in the East.
Right, less Texas-centric.
Exactly. And management's growing comfort, or maybe bullishness, on those Eastern markets, driven by things like data centers, potentially tighter power supply. That's a really crucial point for you to understand.
And the big picture strategy seems to be about capturing growth from rising electricity demand and really valuing flexible generation and these VPP capabilities in a grid that's definitely changing.
Perfectly put. It's a bet on flexibility and scale in key markets.
And that big equity stake LS Power is taking, that signals alignment, maybe reduces some risk perception.
I think so. It suggests shared belief in the combination. Plus the focus on immediate accretion, that strong long-term growth target, and sticking with the capital returns plan, those are all things likely to resonate well with investors.
Okay, makes sense. So let's transition now. Time for our This Is Not Financial Advice segment. Pure speculation, maybe a little outrageous, but plausible trade ideas based on all this. Your first idea.
All right, idea number 1. Bet on PJM capacity prices soaring. PJM is that big Eastern power market,
right,
where NRG just massively increased its footprint.
Okay, why?
Well, NRG management hinted about potential market tightening there. And the financial justification for this huge acquisition probably uses somewhat conservative assumptions about future power prices in PJM. If things get tighter than expected, maybe due to data centers, retirements, whatever, those prices could really jump.
And NRG would benefit significantly more than projected.
Exactly. So a long position in forward PJM capacity prices could be a way to play that potential upside. Higher risk definitely depends on regional market dynamics, but potentially higher reward.
Interesting. Okay, got another one. Maybe less market-focused, more company-specific.
Yeah. Second idea. Play the data center build-out directly through NRG.
How? Just buying the stock.
Essentially, yes. A long position in NRG stock, but with the specific thesis that the market isn't fully valuing their potential to win big data center contracts.
Because those aren't baked into the current projections for the acquisition.
Precisely. Management highlighted their enhanced ability to serve these large loads. They explicitly said no deals are baked in yet. If NRG starts announcing major power supply agreements with data centers in Texas or the East, well, that could significantly boost revenues and earnings beyond current expectations.
So it's a bet on their execution in landing those specific large customers.
Right. Requires conviction that they can actually capture a meaningful slice of that booming data center power demand. Again, speculative, but plausible given the strategic focus.
Definitely some food for thought there. Okay, let's wrap this deep dive up. To summarize, NRG, strong first quarter performance.
Yep, record EBITDA to start the year.
But the really big story is undeniably this transformative acquisition of the LS Power assets.
Absolutely dominates the narrative. It massively scales up their generation, really enhances their strategic position in key U.S. markets, and comes with promises of substantial earnings growth and continued shareholder returns.
And then there's that layer of potential upside, the gravy we talked about, from large load demand like data centers and potentially rising power prices, which just adds another dimension to their future story.
It makes them a much more complex but potentially more rewarding company to follow going forward.
Indeed. Now, remember, everyone, do your own thorough research and due diligence before making any investment decisions based on anything you hear. This is just our analysis of the call.
We'll definitely keep tracking NRG's progress integrating these assets and how the broader energy market evolves.
What are your thoughts on this massive acquisition? Is it the right move for NRG? We'd love to hear from you. Join the conversation online and let us know what you think.